So let's welcome on board Nirupa Shankar from Brigade Enterprises to talk about exactly that. Nirupa, hi, great to have you on the show. Before we talk about the specifics of the company, help us understand the buzz that we're hearing about the potential land monetization plan from the Karnataka government. If reports are to be believed, the Siddaramaiah government is looking to monetize land parcels worth about 25,000 acres around Bangalore. I mean, do private developers such as you, I'm guessing, do stand to gain from this plan?
Yeah, currently, I think with the way the real estate market is doing, there's a huge requirement for additional lands based on the kind of demand that we're seeing. For us, currently, the way we are looking at our enhancing our land bank is basically through a lot of joint developments. And there are some land parcels that come up for auction. So then we try to bid for those as well. So it's a combination for us for outright and joint developments.
But so much of land, if it comes out, wouldn't that have an impact on the supply and ultimately then the underlying prices?
I don't necessarily think so. I mean, it will probably come out in a phased manner. It won't come out all at once. And currently, since the demand is fairly strong, I think the land monetization will happen in a more phased manner. So it should keep up with the way the demand is going. But that said, as of now, demand is looking good. We'll have to see how it continues in the years to come. Typically, what we see is that, for instance, Q1 is typically a little slower than the last 4 quarters or Q4 of the previous year. So, we'll have to wait and watch and see how this land monetization actually comes into the market and how it's pushed into the market.
So one is demand, second is price. So is demand coming at higher prices or demand is coming and price hikes have not happened?
Price hikes have certainly happened. What we are seeing is that there has been a pretty good price absorption. For instance, what we saw last year was almost a 23% price hike from our average realizations. And this was, the market was able to absorb this. One of the reasons for the absorption of the price hike is because there's also a very low inventory overhang. Currently, we have less than 4 quarters worth of inventory overhang. So there is a decent amount of demand. And the sales cycle is basically shortening. So for instance, it used to be, say, sales cycles would be over 3 years or so. And now we're trying to shorten it into 18 months because there is scope for a price increase. We're able to get the realizations we want. And there is sufficient demand despite this increase in prices. So we expect that even this coming year, that prices, we will be able to increase the prices. Whether or not it's by 20%, 25%, that is yet to be determined. But I think a 10 to 15% in price increase should be possible.
So demand is strong and you're anticipating a further room to increase the prices by 10 to 15%. Clearly a great time for the real estate players. But I wanted to talk to you about a couple of those projects that you've launched, WTC in Kochi, as well as the mixed-use project that you've launched in Chennai. What's the kind of revenue potential and when does it start hitting the books?
So let me just start with the World Trade Center Kochi. So for us, we've been in that market for some time now. So this is the third wing of the World Trade Center Kochi. So it's a total of about 1 million square feet now. The wing 1 and 2 were about 700,000 square feet. And now the wing 3 will be about 2.5, close to 3,000 square feet. So I think the additional investment that we plan to make is about 120 crores. And overall, that project should be able to give us at least 75 crores per annum in terms of a rental revenue. And apart from that, we're also launching a project in Trivandrum called Brigade Square and Technopark Phase 1. So that, again, is a smallish project, but it's a non-SEZ project, and it would be our first foray into Trivandrum. We believe that, the Tier 2 market story, there is still a story to be told there. Currently, all the focus has been on Tier 1 markets, which are the primary economic drivers for our businesses. But I guess with Tier 2 markets, it's something that cannot be ignored because a lot of our clients are looking at the Tier 2 markets, especially post-COVID. There was a reverse migration to the Tier 2 markets. So there definitely is some demand for office in Tier 2, and hence our desire to also create some office spaces in the Tier 2 markets. With regards to Brigade Icon, we've just received the RERA application, so we will be launching that we will be launching that hopefully this quarter.
There is a historical correlation which is in Bangalore. Bangalore is IT. IT is job creation. Job creation leads to more demand. Hiring numbers are not looking strong. Job creation is not happening. Wage hikes are not great for the IT sector per se. Could that have impact on demand per se, at least in the Bangalore region?
So yes, I think historically IT has been the primary demand driver for office and resulting in that also residential. But I think now the focus is now on GCCs and the global capability centers that various companies are setting up. In fact, the revenues from GCCs is, I think there was an article that said almost $46 billion, which is slated to go up to almost double or triple that in the next few years. So there is a large demand from GCCs, and this should also be a driver for office space, and thereby also resulting in the demand for residential as well.
Okay. For Brigade in 3 years from now, how much revenue are you projecting to come, let's say, from the Bangalore region? How much would be non-Bangalore?
See, currently, I would say in FY24, almost 90% of the projects were from the Bangalore region. But again, if we just look at the way our launches are coming up in this year, we are expecting about 60% of the business to be from Bangalore, and the balance split between mostly Hyderabad and Chennai. Of course, markets like Kochi are also there. But I would say, for instance, if we look at the residential segment, we plan to launch about 12.5 million square feet. Of that, about maybe 2 million in Hyderabad, about 3 million in Chennai, and then the balance in Bangalore. So currently in FY25, I'm just focusing on the where we have the foreseeable data for. So there we are already expecting a 60-40. And I expect this sort of a trend to possibly continue, where Bangalore will continue to be our focus market, but we are also looking to enhance our market share in Chennai and Hyderabad. For the office segment, of course, Bangalore is still the primary market. Again, we are looking at Chennai, Hyderabad. Maybe we will start to look at more tier 2 cities. As I mentioned, Kochi is one of the focus, is a market where we're expanding. Trivandrum is also a market where we are looking to get more space. And then we need to evaluate which are the other couple of tier 2 cities we are looking to establish more office space. GIFT City, we already have one building there, and we are looking at doing the second building there as well.
Okay, GIFT City is also getting a lot of interest. But Nirupa, before we let you go, the exit rate for Q4 in terms of pre-sale was around 2,200 odd crores. You clocked almost 6,000 crore in the year gone by. How's been the traction in Q1 with respect to pre-sales, and for the entire year, what should one expect?
So basically, pre-sales for Q1, as I mentioned, Q1 is typically the slowest of the quarters. I think so, but this year there have been a fewer number of launches, but I think in this last month of the quarter, we are looking to launch about 2 million square feet. So we are on track as per plan. But generally, even in the budget, Q1 is typically budgeted as a slightly slower quarter than, say, the preceding last 3 quarters that we've had. So we are on track, and we are moving as per budget. But slight push in the timelines for some of the launches. But like I said, whatever is planned, we will be able to launch for this quarter as well.
Okay, Nirupa, on that note, we'll let you go. Thanks so much for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.